The financial system and the dollar and fiat money is the Titanic, right? It's sinking, right now slowly, but consistently. And Bitcoin and gold are the lifeboats. They're not going to sink. They're going to be here. They're going to be money. They're going to have value in the future. All right. So I kind of see the cycle taking us to at least 200, and I kind of see that probably next year sometime. I think it's entirely, and there's some outliers. If you go back to prior cycles, you can see that sometimes it went to 3 or 4x the moving average. So, if you told me that it went to 400 in the cycle, I wouldn't be surprised. I mean, I think 500, probably unlikely. I think Samson's million. No, I don't think so. But the model I'm kind of operating under, Brandon, is that sometime in the next year, 2026, we see 200, maybe higher, maybe 220, maybe 300. I don't know.
In his opening analysis, Lawrence Lepard emphasizes how unsustainable the current debt-driven financial system is. While hard assets like gold and Bitcoin stand to gain, he notes that growing deficits and unrelenting money creation are devaluing fiat currencies. Lepard claims that these circumstances provide a potent environment for investors who understand the long-term trend away from conventional monetary systems. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
In my mind, I look at the Meyer multiple a lot, which is just the price of Bitcoin compared to the 200-day moving average. And you can see it on Twitter. There's a Meyer multiple website account which shows you every day what it's at. And the moving average right now, I think, is around 98, 99, maybe 100,000. And so, Bitcoin has spent very, very small amounts of time above the 2x that moving average. So under that moving average, it's clearly undervalued. Sometimes it's been deeply under that moving average, way undervalued. Like it was 15,000, it was insanely undervalued. Mm-hmm. So I kind of see the cycle taking us to at least 200, and I kind of see that probably next year sometime. I think it's entirely, and there's some outliers. If you go back to prior cycles, you can see that sometimes it went to 3 or 4x the moving average. So, if you told me that it went to 400 in the cycle, I wouldn't be surprised. I mean, I think 500, probably unlikely. I think Samson's million. No, I don't think so. But the model I'm kind of operating under, Brandon, is that sometime in the next year, 2026, we see 200, maybe higher, maybe 220, maybe 300. I don't know. And then I guess I think the cycles still do occur, and I think they just occur because of normal human fear and greed. And what'll happen, what will drive the last push of that cycle will be a lot of people diving on board, a lot of rah-rah cheerleading, a lot of people starting to use leverage. And this is one of the things I worry about with the book and everything else. Everyone will finally, as this thing starts to work, everyone says, oh, you got to read this book. They'll read the book. It'll be at 250 going to 300. They'll jump in, and then it'll correct from 300 back to 175, which, by the way, 175 will be really good, but that's kind of what it does. You know what I mean? And that'll just be because, some of the people were over levered and they couldn't really hang on to what they had, and it wasn't stable demand, and so on and so forth. So I don't think the cycles are dead. I do think they're attenuating. I mean, originally there was like a 90% drawdown, 80, a couple in the 70s. I think the last one was just over 70. I don't think we'll see another 70% drawdown with all the broad distribution today, but 50%, sure. 40%, absolutely. 50%, probably. 60, maybe. I don't know. But off of what high? And so...
True.
So I kind of look at I kind of use the power law, and the thing that makes it tough to consider, let's say it goes to 400 and you think about maybe selling some there, is that there'll be one of these where I said this earlier, the power law will break, be kind of like holy, I mean, so some of it will depend. Does it get to 400 or 200 just based on the normal cycle, or does the new Fed chairman come in next year, cut rates to zero, do massive QE? We issue dividend checks for for everybody who suffered. You know what I mean? We do, even Trump goes UBI to try and buy votes. The deficit blows out to $4 trillion. I mean, at that point, we might go through 300 and never look back, and Samson might be right. Do you know what I mean? But I don't, I think you gotta ask yourself, you gotta look at kind of what's going on in terms of policy, what's going on in terms of price, and what are the probabilities and the odds. And, I'm very comfortable buying it right here. In fact, I just bought some, but, at 250, well, if I got some cash out of my gold stuff, would I immediately dump it into Bitcoin? I'm not sure. I might not. I might wait thinking that, I might see 180 or something. I don't know. Mm-hmm. I mean, we'll just have to see. it's a very, very tough thing to call, and you have to understand, the nature of the way it trades. And fortunately, having lived through five of these cycles or so, or 3 or 4 of these cycles, I can kind of say I think I get how it trades, but I don't know how to call the tops and the bottoms. I just don't know what they're going to be, right? So,
Yeah.
same numbers just for gold and silver, by the way. I mean, I think gold hits 5,000 by the end of next year, probably 4,000 by the end of this year. By next year, I mean 2026. I think silver silver takes out 50 this year, probably hits 75 by the end of next year, maybe 100. The financial system and the dollar and fiat money is the Titanic, right? It's sinking, right now slowly but consistently. And Bitcoin and gold are the lifeboats. They're not going to sink. They're going to be here. They're going to be money. They're going to have value in the future. All right. What causes a hyperinflation, okay, when a quorum of the people involved in the market, more than half, usually substantially more than half, come to realize that they can never stop printing money and that the flow of money will continue forever. This is the fire in the theater, i.e. this thing is, smoke is coming up. I got to get out of here now or I'm going to die. Okay. When that awareness sinks in with a large body of the populace, and they're going to say, and at that point in time, they're not going to be buying. I mean, and Bitcoin's going to be really expensive, and gold's going to be really expensive, but they're going to be thinking to themselves, I don't care how expensive it is, I got to buy it because maybe they'll buy real estate. But the thing is, I got to get out of this goddamn dollar because it's failing, and the way you'll be able to tell that is the slope of the curve will go almost vertical. If you don't have 25% of your assets in shit, you're crazy. Because, if we have the kind of inflation I'm describing and you don't own this stuff, you are going to get hurt. And just 25% will protect you because it's going to go up so much, it's not going to matter. I mean, the other 75 can be worthless. You're still going to be fine. But if you got zero in this stuff, you are nuts.
The fixed quantity of Bitcoin changes our perspective on investing. Bitcoin is rare by design, in contrast to equities, which have the ability to issue new shares and erode value. It has a distinct advantage due to its scarcity, which also makes it more difficult to apply allegations of overvaluation in the conventional sense. According to Lawrence Lepard, Bitcoin's overall market value is still under $2 trillion, despite the fact that global wealth, including cash, equities, bonds, and fiat money, is approximately $450 trillion. This enormous disparity demonstrates how much space there is for capital to enter the Bitcoin market. Lepard contends that because of its underlying scarcity and the expanding perception of Bitcoin as digital sound money, demand and inflows may keep increasing for years to come. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
As you and I both know, I mean, this is one of the things that makes me, when people say, well, we're too early here, we're too late here. I say, no, you're not. There's $900 trillion of wealth, fiat wealth. That's including real estate. So take real estate away. Call it $450 trillion of fiat wealth out there. Stocks, bonds, cash, securities, right? Bitcoin's total market cap today is $2 trillion, a little over it now. Well, 2 over 450, it's still a pretty small percentage. And so more and more of that 450 is and when that 450 realizes that this is something that can't be diluted and this is something that's going up forever, Laura, they're going to migrate and say, well, yeah, maybe I shouldn't hold these bonds, maybe I should hold this Bitcoin, or maybe it's not I sell my bonds, but maybe I buy this Strike preferred and get a 10% yield. That's interesting. And people say, well, that's risky, you're betting on Bitcoin. No, you're not. You're at the top of the capital structure and that preferred is covered like 10x. I mean, the top one, and I don't think it yields 10% now, it yields less, but you've got a lot of Bitcoin underneath it. And so that Bitcoin, even if that Bitcoin collapsed in value by 70%, it would still be a big number relative to your preferred. And that preferred gets the first dollar out of that company. So, that's pretty low risk, right? And so, it's kind of a genius move. And, some have called it, and I agree with this, some have called it a speculative attack on fiat currency. And it really kind of is in a backdoor sort of way. And it's amazing to me. I mean, one of the greatest things about Bitcoin is the way it kind of frees you. I mean, you can be an artist, you can be, a teacher, you can be whatever you want to be. If you get this one thing right, you take your savings, you put it there, you sit back, you set it and forget it. You're going to wake up in 5 years or 10 years, you're going to find out you got multiples of your money. And that's, Bitcoin, it's the best performing financial asset in the history of the world, the last 15 or 16 years. The fact that most financial advisors don't recognize that, focus on it, understand why that's true and why it's likely to continue, it's just criminal. It's just absolutely criminal. And so But it's hard, Brendan. I mean, to be fair, in most investing, generally speaking, when something goes up a lot, it often does become overvalued. I mean, that's a tautology that's not unrealistic historically. But because suddenly we've got an asset with a fixed supply, that rule has gotten thrown out the window. That's an investing rule that held through many, many decades, cycles, millennia almost. And yet we've now got something with a fixed supply. And, so it's a different animal and a different set of rules apply. Do you know what I mean? And so,
absolutely.
And that's what's really hard for people to get their arms around. I mean, on the is it too expensive thing, I also like to use the Titanic analogy. So I say, all right,
In closing, Lawrence Lepard highlights how Bitcoin alters the rules of investing. Generally speaking, an asset gets overpriced when its price increases significantly. With ages, this has been the case with commodities, stocks, and bonds. Bitcoin, however, is unique in that its supply is fixed. There will never be more than 21 million coins, regardless of how much demand increases. This special characteristic defies convention and establishes a completely new structure that investors can comprehend. Since Bitcoin has been the world's best performing asset for the past 15 years and still has a lot of potential, in order to demonstrate how inflation affects judgment, he also makes analogies to actual circumstances. For instance, when new tax regulations or tariffs are implemented, consumers tend to acquire items like vehicles or equipment sooner because they expect prices to rise in the future. Lepard anticipated that inflation would drive up the cost of a new truck, so he purchased one early. This story emphasizes a broader point. Inflation is much higher than the official figures indicate and affects everything from commodities to food, housing, and insurance. The hidden inflation that people experience on a daily basis is what is driving an increasing number of investors to seek refuge in valuable assets like Bitcoin and gold. Lepard is essentially asserting that Bitcoin is not merely another investment. People can use it as a tool to fight back against inflation and careless government actions, as well as to acquire independence and security. He thinks you may see life-altering benefits and shield yourself from the depreciation of fiat money if you only save in Bitcoin and hold it over time. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.